keep an eye on JSW Steel because the company has clarified to the stock exchanges that there has been no increase in stake as far as GFE is concerned, and none of GFE or GFE affiliates have been increasing stake in the company via any kind of a conversion or any kind of open market purchase or sale. Do remember there was earlier news reports stating that JFE has increased the stake in JSW Steel, and that is there was some bit of buying speculation in the stock that might cool off in today's trading session as per the expectation. Also keep an eye on Jet Airways, and our Retina exclusive says that the promoters would look at an OFS for a minimum 5% stake in the company. Do remember, Jet Airways is promoter shareholding is little over 80% right now, which will gradually come down after the Etihad deal. But still, the promoters would have to take down their stake to 51% according to FDI and FI route limits. And that is the reason why Naresh Goyal might come forward and initially sell a 5% stake via the OFS. And what we understand is IDFC Securities is the sole advisor as far as the entire OFS is concerned. So keep an eye on Jet Airways. We have Pipavav Defense, and the company's problem, are not ending here. Again, this is the third time when the defense minister has put the joint venture with Mazgaon now on hold. This is after the complaint filed by Larsen and Toubro as well as ABG Shipyard, wherein they have sought irregularities and favoritism as far as the entire bidding process was concerned. And two key earnings, geometric earnings disappoint. Their profit is down 41% on a quarter-on-quarter basis. Their revenues are down 1.5% on a quarter-on-quarter basis. The stock is expected to open negatively in today's trade. However, on the flip side, we have KPIT Cummins, wherein the PAT is at 51.2 crores, marginally down on a quarter-on-quarter basis. But the management is guiding for a 16 to 20% profit growth in FY14, which might be a fillip for the stock going forward.
Well, Lanco Infratech, Hindustan Unilever and Exide Industries were the three stocks buzzing in trade. Lanco Infratech surged more than 11% in trade, backed by 6-week high volumes of over 3.3 crore shares. It turned out to be the top gainer on BSE 200 index after news of it ending its protracted litigation, which was initiated by Perdaman Chemicals for a whopping claim amount of $3.5 billion Australian dollars. So it has successfully reached the settlement agreement, as part of which it will only have to pay $7.5 million Australian dollars in addition to the legal cost to Perdaman Chemicals, after which all the allegations against its Australian unit and 100% coal subsidiary Griffin Coal will be withdrawn. This is significantly positive as it lifted the legal overhang and enabled it to move forward with its mine expansion plans. Next was the FMCG giant Hindustan Unilever, which shot up more than 7% after posting a strong set of fourth quarterly earnings driven by 3-month high volumes. Now, if you look at the top line, it showed a 12.5% growth. The bottom line also 14.5% growth. This came in line with street estimates. But what really cheered the street was strong underlying volume growth of 6% and expansion in EBITDA margins by 50 bips to 15.25%. Also, all its major segments reported double-digit revenue as well as margin growth. Lastly, Exide Industries dipped 3%, dragged down by 3-month high volumes after its top line and bottom line barely came in line with street estimates, and its margins also fell to 13.3% against 14.7% year-on-year, and the profitability was largely on account of higher other income, and sales revenue growth was seen only because of replacement demand in the four-wheeler space.